You are listening to ChartingWealth.com for Tuesday, the 11th of October, 2016. Let's jump right into the market. What do we see going on in the total market? We had an up day. We still have a down market. We have not yet seen a crossover going up, but we do see the derivative oscillator losing energy. We see the MACD moving toward the signal line. It's not moving down at this point, nor sideways. It's moving up a little bit. We did have an up day, 0.53%, and we did cross over both our weekly and our two-day trend lines. But again, the big determinant, we're still in the negative on the MACD. Now let's take a look at what happened intraday, and we're going to also look back at what actually went on Friday and how that compares. Down day on Friday, and then Monday, a bump up in the morning, matched by about the same amount in the afternoon, closed a little bit higher than it did in the morning. Again, like we set up, 0.53%, crossed over in the morning, going up on the MACD, on the 4-hour chart, half-day chart, and then the derivative oscillator kicked over into the positive. So again, pretty good climb for the market. It actually reached, well, it touched where the market started going down all the way back on Monday, the 3rd of October. Hasn't hit the high that it was on that Friday prior. That was actually the 30th of September. Again, the derivative oscillator is in the positive on the short chart, but still in the negative on the long chart, still in the negative on the weekly chart. And remember, all things being equal, the market tends to move in the direction of the biggest chart, and that's the weekly chart, which is still negative. All right, that's where we ended the day on Monday with the total market, IYY. Now let's take a look, SPY. Up almost as much as the total market, up 0.52, vice 0.53%. It too crossed over the two-day trend line and the weekly trend line. We are getting even closer with the S&P 500 to crossing over, going up. It kicked over into the positive on the derivative oscillator, but we haven't had a crossover yet on the MACD, but lots of acceleration there. Let's look at the 4-hour chart, see what we see. It crossed over also in the morning, big up move, and then a bit of a pullback in the afternoon. So again, up 0.53%. Derivative oscillator crossed over at the same time the MACD crossed over. So huge acceleration in those 500 stocks making up the S&P 500 as represented by the exchange traded fund with the symbol SPY. All right, now let's go and we're going to check out our two-day chart on the Qs. What is the Qs? That's the NASDAQ 100, and it was up the most, 0.63%. Now, what do we see going on here? Unlike the other two charts, the MACD's been in a confirmed uptrend on the weekly chart, and it is the closest to crossing over going up, but it has not crossed over either on the two-day chart. Even though the derivative oscillator crossed over all the way back on the afternoon of Wednesday, the 5th of October. Very, very interesting. Now, let's take a look intraday and see what we see on the 4-hour chart. We see that it didn't cross over until the afternoon going up. A lot of movement up in the morning. Finally, in the afternoon, it was enough to drive over the derivative oscillator and the moving average convergence divergence indicator. So what do we see from all three of these indexes? Well, we see that we are still in a confirmed down move on the weekly and the two-day chart. On the total market, we're up on the short-term chart. Same with the S&P 500 as represented by SPY, still down on both the two-day and the weekly chart. The Qs, however, is different. It is actually up on the weekly chart, still down on the two-day chart. And again, not going to feel real good until that two-day chart pops over and up on the 4-hour. The short-term charts on all of these are up. So that is where we are. Don't have any tradable positions at this point. We will just continue to watch and see how the market develops. The beautiful thing about us is you will see as a non-Wall Street person, not being a market maker who has to trade every day, you don't. So as you practice, and that's what we teach here, is practicing. We don't give market advice. We are not paid at all in any way to do that. We're an education firm, and we want to educate you and have you follow the market with us every day and practice. So that is where we ended the day on those three big charts. Now, for the last few minutes, we're going to take a look at gold. What do we see going on gold? Well, gold is still well below the weekly trend line. It is below the two-day trend line, even though it did have an up day. It closed just below the two-day trend line. Gold is in a long-term down move on the two-day chart, has been going down since the 8th of August. Now, it's had a couple of up times, but then hard over down, hard over down, starting on Wednesday, the 5th of October. It actually started moving down somewhere around the 27th of September. First up day in quite a while for gold, but it wasn't strong enough to penetrate the two-day trend line. What do we see going on? Derivative oscillator, even with that up move, continued to move down, and the MACD and the signal line are still trending down themselves. Now let's look intraday and see what we see. On the 4-hour chart, we see that gold has really started leveling off somewhere really all the way back to about the 6th of October. Thursday, it sort of hit where it has stayed somewhere around the 119.24. It bounced up off that in the morning and then peeled back a little bit of that gain in the afternoon. It was up 0.35%. Still in the negative on the derivative oscillator, but it's been losing that downward momentum. And most importantly, the MACD is moving up toward the signal line. Now, if you've been paying attention, our 4-hour chart to date for many months now, since the beginning of the year, it had failed us right there in late November, December of 2015. Started working again sometime in February. It has become an excellent chart we have found for jumping into and out of gold, and you may find an upward trade in gold coming soon. We're just going to wait and see if this 4-hour chart keeps working. That is where we are as we end the day on Monday the 10th and go into Tuesday the 11th of October. We appreciate you being with us. If you appreciate what we do, please do us a favor. Go to Charting Wealth's YouTube channel. Subscribe to that channel. You'll get the first training that comes out. We also upload our videos first there. We then, of course, also shoot them out first to the folks who subscribe to our newsletter, which you can do at chartingwealth.com. And lastly, we would ask you, besides subscribing to the YouTube channel, please also go to iTunes, subscribe there, give us a 5-star rating. And if you're out and about on YouTube and Facebook, rather, please also consider giving us a nice 5-star rating and saying something good about us at our Charting Wealth channel there, because you can find us on Facebook, YouTube, Instagram, you name it, Twitter. We are there for you. Let us hear from you. We appreciate you. We wish you the best in learning how to read these charts, because they are truly your roadmap to riches. If you can read a stock chart, you do have that roadmap to riches. So practice every day. Once you get good, you can make your own decisions, but train with us in the meantime. God bless from chartingwealth.com.